Rahul Gautam, Executive Chairman of Sheela Foam, now joins in. Hi Rahul, good morning. Thanks for joining in. Rahul, let's start with the numbers on the face of it. We've seen a 33% increase in revenue, but net profit is down 79% year on year. What were the primary factors that contributed to the significant drop in profitability, and what measures are you implementing to see that change and improve in the second half of the year?
So thank you. I'm sure that you are aware that we are going through a process of integration. We acquired Kurlon about a year back. It was October last year. And during this process, the streamlining of the back end, the front end, and all the services that has been taking place. Happy to announce that integration is almost nearing completion, and the impacts of that are getting reflected on the sales part of it. As far as the profitability is concerned, if I look at both the companies and compare it to that from the previous year, we have improved. However, all the benefits of the synergies and the other things are yet to come in, but they are in progress. And as I have advantage of looking at October too, that process is well on track.
Mr. Gautam, good morning. Neeraj here. Been a while. A happy new Samvat to you. I wonder if the Samvat could turn out, the start of the Samvat, which is the first 6 months, could turn out to be good, because a lot of people believe that the government spends which haven't happened thus far are impacting both consumption as well as capex, and that turning around, if the government does indeed decide to go down that path, will improve the economic growth and thereby consumption as well. How do you sense this for your business as well as for consumption at large, sir?
So thanks, Yash. I'm in complete agreement with you. I think this shift towards a higher growth was just waiting to happen. Now, if it coincides with the somewhat changing, so be it. But as I see the next couple of months or 6 months, at least for our trade, for our business, for Sheela Foam, Kurlon combined, I see that as positive. One thing which is, of course, giving us some tailwinds is also that the acquisition is about now a year old, and the integration is nearing completion. So as a company, we have a little bit of an advantage compared to the segment per se.
And Mr. Gautam, so therefore, if this indeed turns around, would that help operating leverage and therefore operational metrics as well? Or is the margin hit for completely different factors, and would the new normal be what you've done in Q2 on the margins, or could those improve as well with improved sales?
The margins will improve. In fact, the trend or the trajectory is upwards as these synergies kind of come in. And in the coming times, we just see that improving.
Right. So let's, I don't know whether you've moved on from margins. Can I go back into Kurlon? Let's talk about volume growth. Sleepwell volumes have grown 40%, Kurlon's volumes have grown 26% YOY. Would it be a fair assumption for us to make that this is the pace of volume growth we can expect from the company the second half of the year, with a clear bias that there could be upside risk to that number?
So the order of growth will not be very different. However, the numbers may not be as high as this because we must appreciate that this is just when the, as I said, that the integration is in its final lap. However, we would continue to see the full impacts of it happening, and the percentages may not be 43 and 26, but more like 20% as we go forward.
Let's assume that that level will moderate, of course, because the heavy lifting has already been done in this quarter. You know, with Kurlon, which you mentioned that the integration is on track, the anticipated annual recurring savings is expected to be 100 odd crores. You want to tell me whether those cost savings are being realized already, or when will they be realized, and what is the sort of timeline you've set out for yourself to achieve that?
So this 100 crores is based on the current run rate, and some of it we would have seen in the quarter which has kind of gone by, but the real benefits would come in the H2 part of it. We expect the entire 100 crores to be at the full run rate before the end of the financial year.
Mr. Gautam, so I believe you cited that you will probably grow at a 15% CAGR for the next 3 years. Correct me if I'm wrong. Would FY25 also turn out to be a year like that? Can we start off with that? Do you believe 15% in FY25 can happen?
So our expectations were really from FY26 onwards. However, we would see something which is not too far away from there. At least on the volume part of it, we would see growth of the level of between 10 to 15% as far as this FY25 is concerned. But we will be on track of it for the 15% CAGR from February onwards for sure.
Okay. The other is a slightly broader question. I mean, multiple, and because you are present, and again, correct me if I'm wrong, but at the premiumization end, that belief was that the Indian premiumization story, with the per capita being what it is, will only see a non-linear hockey stick effect. One, I see you talking about 15%. Two, I hear a corporate after corporate coming out and saying that it is not turning out to be as simple, and the categorization needs to be very specific for even premiumization companies to log in growth. So some will log in growth, some won't. What's your sense here on this?
So I'm quite in agreement with majority of them that premiumization, though that's a constant effort that we do as a company, however, is not so easy to do, and it is definitely category specific. So, for example, for our category, which is really not a top of the mind category, it's a mattress is a mattress. I mean, to say that a good mattress and a bad mattress or a not so good mattress, to differentiate between the two, to communicate that, to let the people understand, experience it, it does take some time for that to happen. And in the last couple of years, there have been two major factors which have really tried to bring the or the ASPs down. One was which started off with COVID. Now that is kind of bottoming out. But the other one that is actually impacting is the e-commerce side. I was always thinking that e-commerce is not something that would impact us as a product, because it's a voluminous product. Sizes have to be accounted for, plus something which is not easy to exchange. I mean, I know companies are giving a 100-night free trial, etc. But e-commerce, as it grows, per se, people believe that you should get a better deal, and therefore that keeps driving the average selling price, and which is very contrarian to premiumization. Having said that, it's our job as a company, and now that as I said, we are settling down, our process will be to get back on this journey of premiumization. It will be slow, but it will happen.
Rahul, just one more question, because we do understand that you're trying to enter into new segments in newer markets, so Australia and Spain, where, of course, your top-line growth has been slower due to lower raw material prices as well. Could you tell us what are the plans for Australia? What are the plans for Spain? How is this going to, sort of help your top line and your bottom line going ahead?
So both Australia and Spain are very different from each other. Australia, we've been there for almost 17 years. It's a very matured market, settled market. Population does not increase. Everyone has mattresses, and it's only once in whatever 8-10 years that you change your mattress. However, it's an economy where it's going to be stable. It's not going to grow too much, but it does create a lot of advantages for us to, as far as technology is concerned, marketing capabilities are concerned, product developments are concerned, and that's what it gives us. If when we shift to Spain, and sorry, and in Australia, we are a large market, probably the largest player in that market, almost about 35%. But when we go to Spain, we are a very small speck in the entire European market, which is which is the largest market in the world. There, we will grow. And in fact, if I will see the last quarter and plus any subsequent time, we have been growing at about 14-15% on volumes. The top line may appear a little subdued, and that's only because the raw material prices have gone down. But as far as quantum is concerned, so we see that as a good, steady growth market that will continue. Of course, both of these places being developed areas, we do cross-learn a lot from each other. We see them as steady and progressing. We don't expect any more acquisitions or anything like that. The focus is going to be on the Indian market. And I would say that if I look at the last quarter, what used to be once upon a time, the India versus the Australia and Spain together, a ratio of about 65-35. Today, we are already at 70-30. 70% is Indian market. And the focus is going to be on this market, on the Indian.
Got it. Got it. Mr. Gautam, great talking to you. Thank you so much. And we do hope that the hopeful recovery happens sooner rather than later for the industry at large and for you in particular as well. Thanks so much for taking the time out.
Thank you. Thank you very much for inviting me.
Thank you. That's Mr. Rahul Gautam of Sheela Foam with his thoughts on the space at large and on Sheela Foam as well. Hopeful of a 15% CAGR. This year's growth should not be too far away from that number.